Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of December. So I've kind of depicted it right here for anyone who really wants to pay attention to what's happening. We've had this positive extreme. If I move that magenta line over, you can see the red positive extreme. So our expectation is that, under any weakness, we will get a retrace to that level. Same thing happened over here when we had this positive extreme. We dipped down, was slightly below the ABM at that point because of the rise. In this particular case, same situation. This time it was right around the ABM green level, right around that 3116. This is an algo level we had both on the 5K charts that we were looking at, and you can see similarly it's on the 50K as well. But significantly, it's these dips below the negative 13 with the steel is equivalently coming from above, which bears weakness, particularly if it's crossing the cyan. But when it happens while cyan is under red, it can take a little time before it reacts, and usually the trigger becomes that DOC spread, which is the cyan moving above red, which we are seeing right now. Now, it can still fluctuate for a few days, but it typically portends a little bit more of a dip than we've currently experienced. And in some cases, particularly if the red DOC dips below zero, can lead to, several percentage point decline in the market. So it's something to bear in consideration and be aware of. I was pointing out, if you go back through the history, when we see dips, below 22 in that, then the drop is pretty significant. I posted on our Skype chat a couple of them, but going back to 2010 or even before, some of them are quite significant, and it doesn't happen all that often. Now you can see we pivoted since then. From there, we peaked out here minus 18, but intraday it was even lower than that. So why is it relevant? Well, because what it's expressing is a lack of liquidity from a short-term buyer standpoint. Basically, they just kind of stepped away. And I was talking about the repo action, which is the overnight lending that the Fed does to individual banks to make sure that there's enough cash to handle a lot of the derivative trades and that. And this is kind of a reflection of that. Whenever you see these breaks below the negative 13, even below 7.5, there's exceptional weakness. Now, you can see that when that happens, it's still led to continuing rise in the market. But when these build and you correspond with the DOC spread, you tend to get a much deeper contraction of price before it stabilizes. In some cases, it can be quite severe. And a lot of times what looks like some of these mini flash crashes where it's just not even sellers as much as just normal market activity stops, and that in and of itself precipitates a significant and speedy decline. So certainly a shakeout moving to negative would be quite scary, but a turnaround here could still lead to additional up move. But oftentimes, if this breaks down, it could take 3 or 4 days, but when it does, it will be most likely a single day or a couple days where it's just extreme volatility and a dip. So that it's happening right at this particular time, significant. So please be thoughtful and mindful of that kind of situation. NASDAQ, very similar in this case. The DOC spread was pretty clean at that particular point, we would expect. And it also has the red below zero at this particular point, so we would expect the potential for weaker NASDAQ than S&P. And of course, that gave the euro a huge bounce, particularly as they're heading into their election. We kind of expected that return to come back after it had filled the dip below the red line, matched it beautifully, did create a new one. So even still, this burst probably not likely to do all that much damage, but that certainly bolsters the U.S. market with that return. Oil still maintaining its range, so no issues there. And gold not moving, so that's an indication that as far as things look, still okay. Whether or not some of the shenanigans has to do with continued impeachment stuff, plus year-end plays get involved. So had to shrink it quite a bit because you can see we had quite a significant amount of activity for the day. We had that big run up, which was all based off positive extremes from the initial move, which we had marked there at the 31.44. And let me just slide this over and we can go increase because you can see the broad nature of the decline. But we'll expand this a little bit so you can start to get into some of the depth of it. But it was really beautiful as we stayed in this continuation mode. Even with the green cross, no orange dip below, so that was not going to be a turnaround. When it finally did, we had our steep spike going up there, but we had the dip below the red line, so we knew that any pump of this was going to fail anyway, and it didn't even really get started before it rolled over, and that was because we had that opportunity of the meeting of shorts with midterm buyers right here. The problem is red DOC still well below the negative 13 at this particular point, needed to have a little bit more oomph before it's ready to do anything significant. And then as soon as it breaks away, whether that was, you could have had the same reaction right here at the first rejection, but it likewise did the same thing. And it happened right at the algo level at 31.32, which meant next one left was at 31.17, which is corresponding to that 31.16 range from a daily. Enlarge this one more time as we can get a little closer. And boom, that led to the cascade right to it. A little bit of support off that one. Again, they meet the rejection, whether you took it a little bit earlier than that, confirmed with the steel cross below, and that led to, well, dip below the red line, revisited the lows, which happens right here. Just nice action. It's not even worth marking these because, again, you can see it here with the cross and then the carry through with the steel below. Sure enough, takes you right back to the lows. It's just rinse and repeat, rinse and repeat. You can just keep doing this over and over again and playing with it. Now, my warning was based on what we had seen from the daily situation to be very cautious about expecting extended longs or anything that was going to have more than just a brief pop scenario, and to be looking for those opportunities where weakness expressed. And every time we got to peak moves right around the 50%, DOC spread trailed right back down to the lows, but we ended up with rising DOC red overall. So by the time you get to this one, you could expect, okay, hey, I might get a little bit more improvement from these. So you can see from the depths of being below the negative 13.5 in these to the P2 setups, which lead to a little bit stronger. Then we ended up with P3s because we were in the higher zone. And that took us to the 100%. But likewise, same DOC spread. And it wasn't until the crossover right there for a little bullishness, but that reversed quite quickly and led to the new lows taking place. And that takes us into the after hour market, which had its little bullish stint. We got above the negative 13.5 crossed, and that's currently where we're at there. We just got the recent split right here, but we're getting a steel turn up, so that could still produce a move right back up to the 100% at this particular point. But you can see we have these same levels, haven't changed. We even have going back down here, and once we get below the 3100, we'll be right at it from 3109 to 31. So it just becomes easy to follow some of these key algorithm spots. They're always, well, not always, but most of the time they're in these unusual numbered categories. They're not in the evens or things like that that people tend to gravitate to because the market doesn't typically work off those numbers. They work off their own average weighted prices that they calculate within the algorithms, and it's complicated how it works, but that's why you don't see it happen at specific numbers that correlate to what we would expect, like at the 3150s or 25s. We tend to get it at, a lot of times at the 23 range. This one happened to be, 16, 17, corresponding to the daily in that. So all in all, excellent action and beautiful volatility within it. And I would expect that we probably are going to get a little bit of pullback up within this decline. But as I pointed out before, that can still happen within what we recognize as a broader short reading. So we'll certainly be watching the daily shakeout and any turnaround we're likely to see on our 50K. You can see DOC building about to break into a new zone, so that could give it a little bit more of a return back up. And rising lows at this particular point, which will still want to pull price to touch the zero marker. And if we see a decline in the 100% marker, then that might give a little more draw up. But from a broader perspective, generally viewing things with a little more caution now, and I think that was something to bear in mind. And so we'll see how much strength comes out of the DOC steel, particularly now. This is new fund money coming in right at this particular point, could be enough to help bolster things. But if we don't get a significant rise out of it, then I would be a little more concerned as we move towards just before the holiday crunch. So it's going to be a fun one. Look forward to it. As always, I will put up relevant charts on the Skype chat. Trade well.